Hey traders, it's John Fortune here with this week's weekly Forex Forecast. Hope you're having a fantastic weekend. We're going to go through the process that we normally go through in today's video. Last week was a fantastic week. We had FOMC as well on the Wednesday and the markets really just corrected and then started to move from FOMC, and I did state in last week's video that that was most likely to be the case. And as you can see, we came down below the major breakout level highlighted previously and also in the thread that I posted on Twitter with the major DXY breakout at the 102.992. And that was purely on the basis of the Fed taking off the table the 0.75 rate hike. However, markets quickly realized this is not super dovish because the Fed are still hiking into an economic slowdown. We've already seen the contraction in GDP for Q1 of this year. And as a result, we saw the DXY snapping back above the major breakout level of the 102.992, and we closed the week up in this area. So if we have a quick look at the economic calendar and we just skim through what we had last week in terms of economic data, because there was quite a bit going on, we did have an interest rate decision out of Australia where they raised interest rates very slightly, was fairly hawkish. However, this is not a significant increase in interest rates. The next key thing to pay attention to from last week was FOMC on Wednesday. We had the hike of 0.5%. However, we saw that initial dip as the Fed took 0.75 off the table. Again, this is not dovish. This is actually bullish. And when you add this hike cycle to the recent contraction in GDP, this is why we're seeing the dollar climb even higher since FOMC. We also had an interest rate decision out of the UK where they raised rates up to 1% from 0.75%. And we saw the pound actually sell off quite hard. And one of the primary reasons for this was that the Bank of England forecast a potential recession in the UK. And of course, if there's going to be a recession, markets are forwards looking. So they're selling the pound because they're looking at interest rates having to go down, which of course is bearish for the pound. And finally, we had non-farm payrolls on Friday. We did have a beat, but with everything going on in the rest of the week, with FOMC especially, this is really nothing we need to pay attention to per se in terms of short-term trading. If we jump ahead to what's coming up this week, you can see we have a pretty clear calendar. The main thing and the only thing we really need to pay attention to is the CPI data out of the US on Wednesday. Generally speaking, this has not historically been a massive event because inflation has been pretty stable. But as inflation has picked up, this event has become more and more important. So again, just like with FOMC last week, if you see the dollar index kind of not doing much Monday, Tuesday into Wednesday, it may be getting ready to move on the CPI print. So just be aware of that heading into next week. But apart from that, we have a pretty clear run and a pretty clear economic calendar in terms of major events next week. Okay, so if we look at the scorecards heading into this week, there's a few key things to take note of. First and foremost is that the US dollar is still currently scored as the best long on a 1 month forward-looking basis. The pound is still the best short going into next week. And also on top of that, we actually have the pound weakening from -2 to -3. This is really the best signal you can get when you have a weak currency, which is becoming even weaker. That is your best short signal. So absolutely, I'm going to be focused on pound shorts once again as an absolute priority next week. I am going to be focused on US dollar long positions, but because the pound is also weak and weakening, I actually like pound shorts as a place to make money next week over and above even US dollar long positions. So pound shorts are my number one theme heading into next week that I'm going to be paying attention to. The second thing to note is the euro has actually strengthened from last week -1 and it now sits at 1. So this is kind of going from bearish to neutral to bullish to neutral, but it's still kind of neutral. But why this is important is because whenever you see the US dollar and the euro scoring either both strong or both weak, it tends to suggest markets are getting a little bit corrective, and especially if they've had long runs, which we've seen in the DXY and in markets in general, it's a sign that the markets may start to become a little bit less volatile, may go into a slight contraction or consolidation. And generally speaking, this is a good sign to actually take fewer trades perhaps and look only for the best trades, because it's a sign that the overall market condition may be turning less volatile. And when that happens, you tend to have less trading opportunities. So the best way to think about this is like a sine curve like this. And one of the most overlooked aspects of trading is when to allocate capital, take more risk, when to allocate less capital, take less risk. And when the market is more volatile, you have more trading opportunities. So for example, the market is more volatile, you have more opportunities, and therefore it's a good time to allocate more risk. And when the market becomes less volatile over here and there are less trading opportunities, this is when markets can get more choppy overall, and this is when it's a better time to actually take less risk. And what happens is a lot of traders, they completely overlook this and they just try to trade and allocate capital the same way every day or every week or all the time essentially. Whereas really it should be a process of trading more because market conditions are good, and then trading a little bit less because market conditions are not as good, and then when they start to pick up you can trade a little bit more. And of course what happens in reality is that traders, or new traders especially, will end up on the wrong side of this, because when they get really good market opportunities, they have either made money and so they want to make more money, and very often, let's say they traded this and they've made really good money, well now up in this area, just as opportunities are about to dwindle or contract, they get perhaps greedy and they actually start to trade twice as much because they've made more money, and they just end up giving all their profits back as opportunities roll over. Or even worse, what will happen is traders will be scared because down in this area they've traded and they've taken losses, and the market opportunities come back in and they kind of sit on the sidelines and they watch and they say, wow, trading conditions are fantastic. And then right up in this area, as they've sat all this out, they start to allocate capital and the market rolls over. And they feel like they're always on the wrong side of trades, and it's partly because of this. So when you see the euro and when you see the dollar, both strong or both weak, you tend to be sort of around this. It's a sign we could be either peaking or troughing, and of course because we've had fantastic moves, it's a sign we may be over here. So just in case we're about to see the markets contract and opportunities kind of present themselves less often over the next couple of weeks, that is why I'll be taking a little bit less risk and looking only for the best trades until we start to see the US dollar and the euro at opposite ends of the scorecards, because that will be telling us that once again we're moving into a point where market conditions are providing more opportunities. Okay, so let's have a look at the individual currencies, and we're on the daily chart as always because we want to just get an overall view, a big picture of what's going on here. And in the DXY, you can see we have broken out of the 102.992 I mentioned in the Twitter thread and previous videos. This is a major multi-year breakout. It's a 7-year consolidation breakout. And we closed the week above this level. With the appearance of the euro in the positive end of the scorecards, maybe, I mean, this would make sense technically, we start to see a little bit of a consolidation in the dollar index around this level. You very often get that with major breakouts because you have disagreements, you have traders trying to sell them, and you have some traders trying to buy the breakout, and as a result, the market can kind of consolidate or just chop. Now, the important thing to note, and you'll see when we go through the rest of the currencies, is the dollar is the only outright technically bullish currency, and I am still bullish on the dollar. So I'm still going to be focused on dollar long positions next week. Next is the euro. Now the euro is a little bit of an indication of what we may see in the dollar because it's essentially the inverse of the DXY. And the euro, unlike the dollar, which kind of dipped back below its breakout level, this has not even come back to test the major multi-year breakout at the 1.06710. So it tells me that these breakouts are, at least for the time being, technically holding. And again, perhaps seeing the euro and the dollar both at the positive end of the scorecard is just an indication that we're going to come back and retest this level, for example, and consolidate before continuing, and in this case down to the 1.0376. So I am bearish on the euro, but the scorecards may be indicating a near-term consolidation, perhaps for a few days or maybe even a week, we will see. And for that reason, euro is not one of my best pairs next week, but I am still looking for shorts, especially as the euro remains below its 1.06710 major multi-year breakout level. Next is the pound. Now last week we came and took out the target set at the 1.2350. We are quite close to the next target. Maybe we take this target out first. If we do, then any pullback will be viewed as an opportunity to look for shorts into the 1.2081. Not necessarily going to be trading pound futures, but this of course will be bearish for the pound pairs. Next is the Swiss franc. We took out both targets to the downside and finished the week right at the second target. I am still bearish on the Swiss franc, and you can see we have some strong momentum to the downside. So any corrections in the Swiss franc are, as it currently stands, viewed as an opportunity to look for short positions in the Swiss franc. This is also in line with the SNB policy of devaluation. So we have the wind of the Swiss Central Bank in our sails with any shorts, and they are usually always the best trades. Next is the Japanese yen. I highlighted in previous videos the major multi-year breakout of the 0.007945. We broke through and we haven't even come back and retested this. This thing has just continued to the downside. I explained also in previous videos why this is taking place because of the interventions in the Japanese bond market by the BOJ. And as it stands, I'm still bearish on the Japanese yen. Next is the Canadian dollar. We actually took out the target to the downside at 0.7754. And the interesting thing about the CAD is you can see technically this is a bearish currency. However, because of the price of crude oil, which is rising, it has been supported and retained some relative strength vis-a-vis the other currencies. When I put all of the macro data into the scoring system, the Canadian dollar scores relatively better than the other currencies. This is why you see it scoring +2. And as we can see from last week, although the Canadian dollar itself sold off, we still had some profitable trades we identified, such as New Zealand Cad, such as Poundcad. So once again, the CAD itself is not particularly bullish, and I much prefer US dollar long positions, but I will also consider CAD strength plays heading into next week, especially Poundcad and New Zealand Cad, which once again highlighted as two of my favorite pairs next week. Next is the Australian dollar. We had a bit of a rally and then we had a rate hike out of Australia, and this hasn't really changed the outlook for the Australian dollar because we're in a kind of stagflationary scenario still. It has been benefiting. However, you can see this has been waning and the Aussie has been losing some strength recently. So overall bearish, but kind of bearish to neutral, technically speaking, on the Aussie. And of course, in the scorecards, we are kind of neutral as well, bullish to neutral. And finally, the New Zealand dollar. The New Zealand dollar is bearish. It's kind of bearish to neutral in the scorecards, but I do like the New Zealand dollar for further declines. And as you can see, it's going to be one of the things I'm going to be focused on next week, primarily in the form of New Zealand dollar and New Zealand CAD, which we're going to look at now. Okay, so let's have a look at the markets themselves. Where are the best setups heading into next week? Starting with crude oil. Crude oil is making its way towards the target set in previous videos at the 113.88. Any pullback in this market is viewed as an opportunity to look for bullish setups into, as I said, the 113.88. And I do believe this target is now going to be taken out possibly next week. I would say even probably next week. And if we start to break through here, we're going to be looking up to the 118.20. This is also important, not just in and of itself, but in the Canadian pairs we're going to be looking at. And also a bonus chart, which I'm absolutely going to be focused on next week, I think is going to be potentially a fantastic place to make money. That is PoundMxn, and we're going to be looking at that in today's video as well. Next is pound dollar. Now, pound dollar was my favorite short last week, and we had a really nice sell-off over 2%, peak to trough, and closed at this target set from last week, almost to the point at the 1.23423. Going into this week, I am focused on pound shorts. This is one of my favorite, if not my favorite setup. I think PoundMxn may actually be my favorite setup heading into next week. But outside of the bonus chart of PoundMxn, we're going to look at pound dollar is my favorite chart going into next week. We have broken out of this. What I'd like to see next week is I'd like to see a pullback, possibly even a retest of this area over here, and any pullback is simply going to be viewed as another opportunity to look for shorts into the 1.2252, and if we break through here onto the 1.20810. So pound dollar shorts are at the top of my list to keep an eye on for entries next week. Next is New Zealand dollar. Now, New Zealand dollar was also a fantastic short last week, again highlighted in last week's video as one of the best pairs to look at. This pullback here was nothing more than an opportunity, as we had pre-planned to short this market into the target. We came just short of the target, so anybody short from last week, I would be looking for this target to be now taken out. For anybody not already involved from last week, any pullback in this area is a second opportunity to look for shorts into the 0.6384. But if I think, which is most likely going to happen, if we come down and we take out this target first and then we bounce and start to pull back, I'm going to be looking for shorts into the next key area of support to the downside, the 0.6240. Next is US dollar Japanese yen. We are completing, in fact, we're just starting to break out of a bull flag here. And I do like this market to the upside. The only reason it's not highlighted in gold is purely because, if you remember from previous videos, the Japanese yen was oversold and it's moving from right to left on the scorecards. It's actually strengthening a little bit, even though the yen is overall weak. So I do like US dollar yen to the upside, don't get me wrong. I certainly think any pullback is going to be viewed as an opportunity, or should be viewed as an opportunity to look for long positions, first into the previous highs, but then on to the 132.15. So I am going to be looking for setups in this market, but I'm going to prioritize pound dollar and New Zealand dollar. If I get some positions in pound dollar and New Zealand dollar, I might leave US dollar yen. However, that is the setup I'm looking for in this market. Now, US dollar Swiss franc, similar to US dollar yen, it's very close to being on my favorite list, but I just don't like these markets as much as I like the top two here. So I am bullish on US dollar Swiss franc, very similar to New Zealand dollar, I believe it was. When we come this close to the target, what we want to really see is the market taking out the target first, because there's not much risk to reward here. The trade was from down in this area on the pullback last week when we were looking at this market. So I'd like to see this market take out the 0.9898 first. If it does that and starts to pull back, I'm going to be treating this as simply another opportunity to look for bullish setups or bullish breakouts into the 0.9959. Next is euro dollar. Now look at euro dollar to the downside. Again, to be honest with you, this probably could be on my favorite list. Outside of the other markets here, euro dollar to the downside is the one market you could probably put up here. And I would say it's my third favorite, even though I've listed these slightly higher. The reason is because we've pulled back and retested the major multi-year breakout in euro dollar. And look at that retest of the 1.06359. We have now started to make a head and shoulders, and I would not be surprised to see this market start to break down from the levels we're already at. So going into next week, I am absolutely going to be focused on shorts in this market down to next key support at the 1.0341. If there's one other market you could add in to the favorites list next week, it would be this one. And in fact, the only reason it doesn't make the list is because of that +1 in the scoring system. So definitely going to be looking for shorts, but it just misses out on the favorites list because of that +1 score in the macro scoring system. And the last dollar pair we're going to look at is Aussie dollar. My least favorite out of all of these. However, I am still bearish. So any pullback in this market would be viewed as an opportunity to look for bearish reversals into the 0.6988. Next is Poundcad. Last week we took out the target at the 1.5875. Going into this week, this is one of my favorite pairs. Guys, keep an eye out for Poundcad to reach its target at the 1.5737. I think this is one of the highest probability setups heading into next week, and I would put the ability for this market to reach its target at the 1.5737 over 85%. I genuinely think this is going to be a place to make money next week, so keep an eye on Poundcad. Any continued pullback is simply viewed as an opportunity to look for shorts once again into the 1.5737. Keep an eye on Poundcad next week. Next is New Zealand Cad. We took out the target set in last week's video. This was one of the best setups highlighted in last week's video, and we took out the target at 0.8238. Coming into this week, this is a very interesting market because the next key area of support is down at 0.80160. This could potentially come down to here very quickly. The reason I've added in a minor target here at the 0.8150 is because it may not do this all in 1 week. So going into next week, the target I'm going to be looking at, although it's a minor target, and I am looking for the 0.80160 overall, any pullback in this market is going to be viewed as an opportunity to look for bearish reversals into the 0.8150. And the final CAD pair we're looking at here is Cad Yen. Again, not highlighted as one of my favorite because the Japanese yen is moving this way across the scorecards. It's strengthening somewhat, even though it's clearly bearish. And you can see that reflected in the price action last week. This market was kind of choppy, whereas we got good sell-offs in Poundcad, New Zealand Cad. So any continued pullback is still viewed as an opportunity to look for potential long positions and breakouts to the upside into the 103.45. And if you want a conservative target, I'd be looking for the previous high over here in Cad Yen. The next market is PoundMex. Now, I think this is a really good market heading into next week. We have some strong momentum, and what I'd like to see is any pullback in this market is going to be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside, the 24.71. The strengthening of crude oil is really a large variable or factor in the recent strength of the Mexican peso. And PoundMex may very well be my favorite short going into next week. It's certainly my top 3 pound shorts, which is PoundMex, Poundcad, and Pound Dollar. Those 3 pairs there are going to be my main focus for making money in the markets next week. And the final Forex market we're going to look at here is Euro Pound. Now, I like Euro Pound because when we look at the scoring system, we see the Euro actually bullish to neutral. And the reason I've highlighted this in purple is because this is a market we can put on our watch list as a plan B, a backup trade, or what you may term a synthetic hedge. And you can play those markets when you have, for example, the euro and the dollar both scoring strong or weak. Because you can say to yourself, well, what if the US dollar is about to weaken somewhat? Then pound dollar may just get corrective like this. But if that happens, then euro pound will rise to the upside, because as the dollar weakens and the euro strengthens, you will see this rising against the weakest currency. So it's not a top priority heading into next week. But if for whatever reason the dollar pairs, primarily pound dollar, New Zealand dollar, fail to provide any good moves and they just kind of chop around because we see a weakening of the DXY, have a look at euro pound, and any pullback in this market would be viewed as an opportunity to look for a breakout into the 0.8599 and then onto the 0.8657. So not a main focus of next week, but a nice market to have in your back pocket if those US dollar positions don't really go anywhere or we start to see a weakening of the DXY. Okay, so wrapping up with gold, silver, and Bitcoin, I have in previous videos been highlighting silver as the best short to the downside. And I said silver is a better short than gold, and we've seen silver outperforming, if you will, to the downside vis-a-vis gold. Now, one of the reasons I've been telling you this is because the 1 month forward-looking scorecards for commodities clearly shows silver as a much better short than gold. Gold is more or less neutral, whereas silver is actually scoring pretty weak. And this is why silver has been a much better short recently than gold. And as it currently stands, this looks still to be the case. Now, last week in gold, we took out the target set at the 1865.64. With a strong dollar scoring in the Forex scorecards and gold scoring as currently neutral in the commodity scorecards, I do favor further downside in gold, but it is once again not my preference. My preference, if you're going to short gold or silver, would be short silver. So any pullback in gold is still viewed as an opportunity to look for bearish reversals, although it's not one of my best trades or best setups heading into next week. And any breakdown is going to be viewed as an opportunity to look for further declines into the 1814.94. Next is silver. We took out the target set to the downside at the 22.52. This was highlighted as a good short last week. Going into this week, this is highlighted again as one of my favorite setups to the downside. We're quite close to the target, so any pullback in this market is viewed as an opportunity to look for bearish setups into the 22.02. And if we come down and take out the target first and then bounce, I'm going to be looking for shorts into the next key of support to the downside at the 21.45. Next is silver versus the euro. We took out the previous target set at the 21.20. Now, very much like euro pound, I've put this in purple because although I favor silver vis-a-vis the dollar to the short side, if we get the DXY weakening or consolidating and we see the euro relatively strengthening, maybe the euro comes back to retest the major breakout level we looked at earlier, then you can actually look at silver vis-a-vis the euro very much in the same way as euro pound as a kind of backup. So any pullback in this market would be viewed as an opportunity once again to look for shorts into the 21.88. And last but not least, we have Bitcoin. With stocks selling off and with the dollar very, very strong recently, Bitcoin has suffered, and we've had a long-term downside target here of the 34,410. Bitcoin, I'm sorry to say to those of you who are fans of Bitcoin, it is currently in a bit of trouble, and I do see further declines ahead for Bitcoin. Any pullback, and this is a classic bear flag setup here, any pullback in this market is going to be an opportunity to look for bearish breakouts into the next key area of support, which is highlighted in previous videos at the 34,410. And I think there's a very good chance we go past that onto the 32,935. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.